Welcome. You're listening to The Best of Investing. I'm your host, Edward Brown. My two co-hosts, Mark Hunt and Nam Phan, are off today. So I'm going to be doing it solo, but I do have a special guest coming on. Our phone number is 888-912-1190. Use that number to answer the trivia questions for a 5-pack tanning certificate given away during this show. And that certificate's not sponsored by the radio station, but by Tan Bella Tanning Salon with 2 locations in San Francisco and 1 in Marin. And each certificate is worth over $100. So that's a nice little trivia contest there. Today's trivia theme is miscellaneous trivia. Now, today's guest is Tom Wong to discuss various topics such as a proposed federal tax holiday and whether banks will lend money for a home if you have student loans, which is very apropos to talk about now because of the fact that the federal government's been talking about lessening or doing some forgiveness of student loans. So I thought that was very interesting. Tom, welcome to The Best of Investing. How are you?
Hi, thank you. Thank you, Edward, for having me on your show.
You're very welcome. So describe what you anticipate a tax holiday bill to look like.
So my idea of the tax holiday bill is a no federal income tax for 1 year for anyone earning up to $250,000 or any business revenue up to $3 million. So you earn it, you keep it, you don't pay into it and wait for it to come back. And this will benefit people from age 14 to 99, for regardless of your political party stance, regardless of your age, immigration status. This will help every American to help pay for the high fuel cost, food cost, pay down credit, help business expand, buy more inventory, and hire more people.
Okay, so if I'm the federal government and I say that and it looks like Mark Hunt is going to be joining us, so that's good. We'll just continue on while Mark joins us here. So Mark, hey, that's okay, perfect timing. So we just introduced Tom Wong. We started the show a couple of minutes ago. Tom's going to be talking about various topics such as federal tax holiday proposal and whether banks will lend money for a home if you have student loans. And I asked Tom the first question about, describe a tax holiday bill. And the first thing he mentioned was, no income taxes for under what, 250,000, I think you said, for individual, and 3 million for a business. So the question I have is, like, how would the federal government, what do they do? Just print money for the next year if they don't collect taxes?
No.
How would they run the government?
They can still run the government. So the impact to the federal government total overall income is very minimal. It's somewhere between 10 and 15%. So it's very minimal, and it's only for 1 year. So in perspective, it is very small. And by year 2, when we spur the economy, because we have more money to spend to reinvest back into the economy,
sure,
and to have more people work, like overtime, and to get used to working, we actually spur the economy, which actually increases the federal income tax.
Well, wait, are you saying that the federal government is not very efficient at spending money?
They are not.
They are not. Okay. I just want to make sure I understood that part of it. Okay.
Tom, how did you come up with this idea? This is a great idea.
Well, I want to protect the middle class and the working class people. Everybody's complaining about high cost of everything. I'm a small business. I pay taxes like there's no tomorrow. I pay state, federal, local permits. There's just all these taxes. Now I'm drowning in taxes, and we always talked about how great it will be if we don't have to pay all these taxes.
Yeah.
Well, I'm putting it to the test.
Well, and certainly in California, as you know, we've got a surplus, and there's always ways that can be spent. And more often than not, when you look back on history, when California has had those rare surpluses, it always hasn't been used in a way that I think really benefits the people who actually pay those taxes. And so I think this is a great opportunity to recognize how expensive it is to live in California, and I appreciate that. You've chosen some numbers that represent really what it takes to have a middle class lifestyle in this state. Maybe nationwide, those types of numbers, making $250,000 a year might put you in the top 1% of your neighborhood, but certainly not in California, and certainly not in major markets like Los Angeles or the San Francisco Bay Area.
Correct. So we chose the $250,000 because we want everybody to benefit from it, and some people just benefit more from it.
Gotcha. And is there anybody else who supports this bill, and has a tax holiday ever been done before?
Nobody. Everybody has touched a little bit on the tax holiday, but nobody's really give it much thought than just bullet points. I'm the only one that's really give it quite in-depth thought into making this happen.
Well, I had this idea. You've heard like May 19th or something is, tax freedom day or something. Basically, it's like you work for the first 5.5 months, and then after that, everything you earn after that has already been, paid the tax on. So I thought, well, why don't I just not work and start working May 20th? But it doesn't work that way, does it? Oh, boy. Then, who else is, so this has never been done before, but like, I know you can get a lot of people who are, making a couple $100,000 a year to support this. But I can just imagine all the federal government people saying, yeah, no, we don't want that.
Of course, they want more money from us, but the closest to not paying taxes, what year was that? 1776, the Boston Tea Party.
Yeah.
That's basically the closest we ever been to not paying any taxes.
Yeah, and I could just see that. I don't know why the federal government would allow this. It's more of us sort of demanding it per se. Tell you what, we're going to go to our first trivia question here. It is, what is permanently frozen subsoil called? There's a certain name for it. Okay, you've heard the name. What is permanently frozen subsoil called? Call 888-912-1190. First caller with the correct answers and win that tanning certificate, again, which is worth over $100. And when we come back, we're going to continue on with Tom Wong, who's going to talk about a federal tax holiday proposal, as well as student loan debt and how you can buy a home, because that's going to be looked at very carefully. Stay with us. You're listening to The Best of Investing. Don't touch that dial. We're going to be right back. Welcome back to The Best of Investing. I'm Edward Brown, your host, along with my co-host, Mark Hopp of Pacific Private Money, who finally joined us after 2 minutes of non-join. That's okay. All right, here's our first trivia question. What is permanently frozen subsoil called? What's the name of that?
I bet Tom knows.
Is it permafrost?
Permafrost. Very good. That is the name. Yeah. The next two questions are actually probably a little easier. So, Tom, in the first segment, we were talking about a potential tax holiday bill where if you make under $250,000, basically you don't pay income taxes for the year. Would this cause inflation?
No. So inflation is when there's more money chasing a fixed amount of goods and services. The tax holiday will accelerate business production of goods and services, increasing supplies should meet the increase in consumer and business demands. Therefore, the tax holiday should not cause inflation.
Okay. And what happens with programs that are normally funded by federal income taxes? What would happen to those programs?
Well, I would need specifics on which programs and what their requirements are.
Like Social Security, I think is taken just from the general fund, right? There's not any specific. Social Security is because they're always stealing
fund, right?
Yeah, they're always stealing from Social Security funds. So, how would that affect Social Security recipients?
Well, it will not. Social Security, it's a separate funding in itself. It does come from general fund to pay back what we borrow from it, but that is not touched. No, I don't have to worry about your Social Security.
Tom, do you have an estimate for how much this might mean in terms of tax revenues? And where I'm going with this is that, when you read about who really pays and foots the federal tax revenues, it's really people making quite a bit more money. Those above $1 million, I think those with incomes above $1 million pay like a significant percentage. I mean, Edward, I think you were telling me the other day you had come across some statistics. I don't know if you remember those right now, but I mean, isn't like, 95% of tax revenue is paid by, by the wealthy. And so do you have an idea of how much this might impact a percentage collection of revenues, Tom?
For the lost, it's only about 10 to 15% for 1 year. So it's very.
What about dollars? What is that? You say 10 to 15%, but what does that equate to in dollars? You think?
I don't have that number in front of me.
You estimate about a 10 to 15% hit, which, but again, I think what a lot of people fail to realize is that the idea for tax incentives is to incentivize activity, hiring, expanding your business. The idea is that, and I know that's not popular to say, trickle down, which I think Reagan was one that kind of brought that idea in the forefront. And a lot of people have said it's been disproven. I don't necessarily agree with that. I absolutely agree that wealth does trickle down from the top, and I think that's been proven time and time again. So is your thought that this would be a net revenue neutral, or maybe even a positive, if the people are given the opportunity to spend the money they earned rather than write a check to Uncle Sam?
I would believe it will be a positive. When people have more money, they will spend it, and they will spend it on things that will make them happy, which spurs the economy.
Yeah.
No,
and when you spend money, you pay sales taxes.
Yeah.
You put more money into the economy. Even if you go on a vacation, the people that own the hotels, the restaurants, all of that stuff. I mean, it's really, it's your money. You have the right to spend it. And when we spend as consumers, the economy benefits. When we write checks to Uncle Sam for money, I'm not sure how much the economy really benefits, because I think so much waste is happening in government that I think the consumer is much better equipped to put that money into circulation and to create that multiplier effect that can be as high as $20 for every $1 spent.
I think a lot of it comes down to, unfortunately, politics. It's not politically correct or popular to lower taxes from the standpoint of, oh, you're just giving the rich people a break. And I still remember this vividly, hearing there was some Democratic senator who basically had said, I don't care if it destroys the economy as long as the rich pay taxes. And it's like, oh my gosh, that's just terrible. I mean, I'd rather see, a 1% income tax, but because, like you said, Tom, everybody makes so much more money, the government will actually make more than they would if income taxes are 10, 15, 20%. I mean, maybe not 1%, but if you lower the tax rate, the government would probably do a lot better.
Yes, I agree.
Yeah. But again,
have you thought about how people might try to game this if they got that 1 year moratorium? Have you thought about how they might want to bunch up their income, so to speak? Recognize income in a certain year.
Sure.
Is that an issue you think might come up?
See that?
They'll actually be gaming themselves. They'll try to cheat themselves because it's their money.
No, but if I were to, let's say I'm making $150,000 a year. If I can get my employer to advance me the next $90,000, then I could get that tax holiday, and then next year not pay. I mean, but yeah, you kind of game it. There's always going to be game system.
But then you have more money to spend.
There you go. That's right. Yeah.
You have more money to spend.
I know. No, it's good. I mean, that's the trick that people would try to play, is to, like Mark says, bunch up your income. Just don't let it go over 250.
Yeah.
So, what would be the process for getting this bill passed, and what could I do to support it?
First, the most important thing is to vote for me in the June 7th primary. And then vote for me again in the November election. Second, follow my bill. I will be crafting that bill. First day in office, I'll be crafting that bill, and follow the bill. Make sure there's no additional special interest added in there. And from there, it goes off to getting voted. The third step is to call and email all the congressmen and let them know that you want this bill to pass. We need at least 50,000 emails and calls to each and every congressman, and let them know that you want this bill. You want a tax holiday.
So this is proposed on the federal and state level or just federal level?
On the federal level.
On the federal level, okay. I'd like to vote for this every year, please.
We got starting baby steps.
Yeah,
Hey, I tell you what, guys, we got to cut to where it goes fast. Let's go our second commercial break here. In what state would you find the Black Rock Desert? In what state would you find the Black Rock Desert? All right. 888-912-1190. First caller with the correct answer is going to win that tanning certificate. When we come back, we've got a few more questions to ask Tom. Then we want to move over to Mark Hahn of Pacific Private Money. Let us know what's going on. You guys are just exploding in good growth.
Business is brisk.
Is booming. Yes.
Yes.
All right. Again, one more time, I'm going to ask this question. In what state of the United States would you find the Black Rock Desert? And if you don't know, if I mention a little hint, then you should definitely know it. All right. Stay with us. You are listening to The Best of Investing. Don't touch that dial. We're going to be right back. Welcome back to The Best of Investing. Edward Brown here, along with Mark Hahn of Pacific Private Money and our special guest, Tom Wong. Okay, so our second trivia question was, in what state would you find the Black Rock Desert? Who knows that?
I know that one.
You know, go ahead.
Arizona.
No,
No?
think of
South Dakota.
Burning Man. That's where Burning Man is held in Nevada.
Oh,
Ah,
there's
yeah.
a Black Rock
Yeah.
section of Arizona. But anyway, all right.
Okay, so Tom, when we're off camera, when we were off on a break, we were talking a little bit about student loan debt and the ability to get home loans. Can you get into that a little bit, please?
Yeah, so when I bought my first house, they went through everything. They want to make sure I paid off my student loans. They want to make sure I'm in good standing with my student loans. They went through my financials. So they want to make sure you have enough money to pay for things like if you miss work for a couple of months, they want you to have contingency money. So part of the lending process is that you have to be in good standing with your student loans. If you defaulted, the banks will not loan you money because they get the loan gets sold to FHA. And so if you're in bad standing with the federal government, that means that they're not going to loan you any money. So with the tax holiday, where you have more money to pay off your student loans, will allow you to have a better credit score, to have a higher loan limit with better interest rates.
Nice. So and so getting a little bit more into the real estate there. So in what ways do you think this tax holiday that you're proposing would impact the real estate market and of course financing, as you just talked about?
It will bring more buyers to the market, more available buyers, which is better for both sides. The sellers will have more competition. The buyers will have there'll be more buyers, more people available to buy first-time home ownership anywhere in the country. If it's too expensive here in the Bay Area, you buy a little bit further out, but it still gives you that opportunity. Versus now, you're swimming in debt, especially in student loan. You don't have that opportunity.
Anytime that you can put money back into the taxpayers' hands, I'm for that.
Yeah.
So that's basically what you're talking about, just giving them. And it's interesting too, because it's not like, in creating money where they're just like writing checks to people, just inventing money. All it's doing is just lessening the expense for income taxes, right?
Yeah.
Yes.
Yeah.
So
Okay.
if this would be an opt-in program, in other words, what would be the process in your mind for taking advantage of the tax holiday opportunity?
So everybody will be automatically opt out, but for those who want to pay their federal income taxes, they could just opt in.
Ah, okay.
Yeah, sure.
Well, you never
Of course,
know.
it's a voluntary system anyway, isn't it? But go ahead.
So do you envision that employers would not need to withhold federal taxes during that time, or would people apply for a tax refund with the IRS after the year is over?
No, there's no refund. You just uncheck the box that says pay federal income tax, and that's it. You don't have to pay into it and wait for it to come back. Sometimes the check's lost, you change your bank account. and you might not even get your money, or you'll forget, that the check came to your post, or somebody could steal it from your mailbox even.
Yeah, sure. So in theory, then you wouldn't even need to file a tax return unless you're over that 250 mark that you were talking about, right?
Yes, and it's not an automatic disqualifier. So if you earn over 250 or 3 million in business revenue, it's not an automatic disqualifier. You'll just start paying starting at 250 or at $3 million.
Ah, that's very important. So it's the first 250,000 that's exempted.
Gotcha.
Yes.
Okay. So everybody. So when you said earlier, everybody benefits, that's exactly what you meant.
Yeah, that's true. Everyone does.
Even those of us in California who, make more than 250, and yet we're still kind of in that middle class lifestyle because of the cost of everything out here.
So I wonder what would the tax rate be then? Let's say you make 300,000, forgetting deductions and all that. So only 50,000 in your example is taxed. What rate would it be taxed at? What do you anticipate?
Well, that would be about a 22% tax.
So whatever like the regular.
Whatever that marginal rate is, I guess, would remain the same.
Yeah, that makes sense.
Yeah.
Wow. I wonder if a lot of accountants will be against this if they have a lot of clients who are in the 250 below range, plus
I don't know why they'd be against it. Just about anything like this gives them more work. So
they are actually for
well,
it.
but if you make 150 and you don't have to file, then
I see.
theoretically they don't need the accountant. And then
I don't know how many $150,000 taxpayers use accountants. A lot of them, I think.
Surprisingly enough, because the tax system is so complicated nowadays that they do. But then you have whether or not you have to lay off IRS employees, because there's a lot of people around the country who don't make.
Well, maybe they'll answer the phone sooner than 8 hours on hold. Have you tried to call them in the last 12 months? You simply cannot get through. And I know, like, our CPA has had to hire staff that do nothing but just sit on hold, where they dial multiple times on multiple lines. Everybody is on hold with the IRS waiting for someone to pick up because they can't. Yeah, they need to have that interaction. And unfortunately, with how difficult it was to retain employees and everyone working from home and not going into offices, many state and local governmental agencies, just about every one of them, you call them, you can't get a live person.
I kid you not, I called Sonoma for like the tax revenue for property taxes, right? And I kid you not, the automated system said, you are 1,276th in line. If you want to hold such and such, otherwise, call us back or leave your phone number and we'll call you back. But I mean, that's the first time there was ever over 1,000 people ahead of me. That's crazy.
So Tom, how did you come up with this idea?
Well, I'm a small business owner, and I pay a lot of taxes. I pay permit fees, state, federal, gas tax. I own a small security company, and it's labor. It's all labor. It's all taxes, and it just hurts me. It hurts a lot of small businesses. They're just paying all kind of fees. And
what I like about this is certainly there are those in the Republican Party, let's just say, they're always in favor of lowering tax rates, but that's more permanent, or maybe for several years until it sunsets out. The fact that this is a tax holiday, I think, would give it some interesting legs and maybe a better opportunity to have some version of this pass, recognizing that with everything that's gone on in the economy and for small business and how difficult it's been during COVID to make money, this would be a great little shot in the arm. I know I would certainly appreciate it.
All right, you guys got to get to our third commercial break here. What war began with the bombardment of Fort Sumter? All right, call 888-912-1190. First caller with the correct answer wins that tanning certificate. Stay with us. We're going to be right back. Welcome back to the Best of Investing. One more time, I'm Edward Brown, your host, along with Mark Hoff of Pacific Private Money and our special guest, Tom Wong. Third trivia question. What war began with the bombardment of Fort Sumter?
I don't know that one, Tom.
I don't know that one either.
That was actually the American Civil War, Fort Sumter in South Carolina.
Oh.
So that's how that started. Okay.
I missed that movie.
You missed that movie. I was sick that day. Tom, if people have more questions about this potential tax holiday, how would they get a hold of you?
They can email me at info@tomwong2022.com.
Perfect. All right. Stay with us. So, Mark, let's move on to you. Pacific Private Money. I know you guys are just extremely busy. What's going on?
Well, the real estate market activity is very interesting right now. So this week, the Fed raised its rates again, 50 basis points. Now, those are short-term rates. Those don't necessarily equate to long-term rates. Long-term mortgage rates are based more on the 10-year T-bill, which is that rate has been going up as we've noticed for the last couple of months. Mortgage rates are now in the 5s, where they were in the low 3s to high 2s at one point 6 months ago. And short-term rates, which is the prime rate, that's now increasing. But all of that notwithstanding, the real estate market and demand for homes is still, I mean, we're in the spring season. I mean, we're in the spring 2022 home buying season right now in real time. So notwithstanding that the stock market last week, went down quite a bit, this week it's starting to go back up again. There's a lot of, unknown information and uncertainty in the economy right now. But that has not quelched the appetite for people who need or want to move. And so you've got a situation which we've had now getting worse for many, many years, and that is home builders have not been building enough home stock in most major metros in the United States to keep pace with demand and the growth in the organic growth in population. So you've got a supply and demand issue, and notwithstanding mortgage rates going up, we at Pacific Private Money have found ourselves busier and busier, providing mostly short-term bridge loans for people looking for capital at the ready that they can use to make aggressive cash-like offers to compete in the real estate marketplace. Now, this is for both consumers looking to buy up, buy down, buy in another state. There's a lot of demand for those transactions. Millennials, first-time home buyers looking to move out from their parents' place or to not be renters anymore. Even though home prices have gone up and now the cost of a mortgage has gone up, the cost of rent is still 100%. Because you don't get any benefit from that. So there's a lot of different real estate buyers, whether it's for your own home or for investment property, that look to companies like Pacific Private Money, who are in the alternative and private lending space, alternative to banks and conventional mortgage companies. And they come to us because of speed and ease and our ability to make fast decisions. So conventional loans cannot compete with companies like us when it comes to flexibility in decisioning and speed. That's really the two big things. If you've gone to a bank lately and applied for a loan, Tom was just mentioning in the last section that if you're carrying student loans, the bank's going to go, wait a minute, we're going to want you to pay all those off. So there's always things like that. They'll look at your credit card debt. They'll look at all kinds of stuff. You come to a company like Pacific Private Money, we'll notice that, but that's not the most important part of the transaction. Really, all we're looking to do is, why do you need the money? And how are you going to pay us back? What's your exit strategy? And if they've got a strategy for getting a conventional or maybe a non-QM exit or a long-term rental property loan, if they're looking for investment property, those are all good exit strategies, and we know how those work. In fact, we can even help with some of those on top of providing the short-term bridge loan. So yeah, we're year over year. We may end the year up 100% growth over last year, and last year was 85% higher than the year before. So we've had 2019, 2020, 2021, and now we're a third of the way through 2022. It's just been it's been all hands on deck.
We've been hiring like crazy. Our team is now over 50 people at Pacific Private Money, and we're still hiring and filling positions. And that's interesting in light of what's happening in the conventional mortgage industry. All you read about every week is the next company that laid off 500, 800, 1,000, 2,000 people. I won't name names because you can find those in the paper, but a lot of mortgage companies that were making a lot of money over the last, many years because of all the refinance activity are finding themselves, top heavy in HR, and they're laying people off left and right. And so we're snapping up quality people in both the production side, underwriters, processors, account executives, loan agents, you name it. We're trying to fill that bucket most likely. But for more information on how you might take advantage of a fast, reliable bridge loan or purchase money loan, if you're looking to buy a home for yourself, or if you're looking for additional options for investment property, you want to go to our website. And that's really simple. It's pacificprivatemoney.com, pacificprivatemoney.com. And there's a whole bunch of information on there about the types of loans we do. We even do ground up construction loans. We do fix and flip. We do the consumer bridge loan like we spoke about. And we do commercial bridge loans as well. Last but not least, if you happen to be listening and you're sitting on money that you're looking for a better yield than what the bank or your current money market account is supplying you, we have been raising private capital for making loans since 2008. And we've got over 400 investors who have invested anywhere from 50,000 to over $1 million in one of our funds that are paying anywhere from 6% to 10%, depending on the type of fund. So if you're looking for a place to earn 6 to 10% on your idle funds, or maybe it's your investment funds, maybe you're repositioning from real estate, maybe you're taking some cryptocurrency profits or NFT profits, and you want to diversify a little bit. You want to park it in some real estate debt secured funds. For more information, again, go to our website, check out our invest page at pacificprivatemoney.com.
Which, interestingly enough, you mentioned cryptocurrency. As I understand it, the IRS is focusing on that the most.
Well, they should, because there's a lot of taxes to be had there, because people are making a lot of profits in that. Although I think I would hope they would focus on the people making the crazy profits right now, and not the little guy who's just using it to help him make more money. So I'd be more in favor of them going after the newly minted multi-millionaires, centimillionaires, and even billionaires out there. Those are the ones that I think can probably manage to pay a little bit of their fair share.
Yeah. Well, especially with the company.
Tax holiday notwithstanding.
Yeah, tax holiday notwithstanding. All right. Well, audience, stay with us. When we come back, we're going to have some closing comments on the best of investing. Don't touch that dial. Welcome back to the best of investing. Last time for today, I'm Edward Brown, your host, along with Mark Humph of Pacific Private Money and our special guest, Tom Wong. No trivia question, but Mark, why do people come to you for a loan?
Well, they come to us for, and I mentioned this in the last segment, speed and flexibility. Speed because we can close in a few weeks, quicker if need be, if it's an emergency. And the flexibility is that we still make loans the old-fashioned way. If the story makes sense and it's legal, we can probably fund it. Now Tom asked me during the break, how. What was the question, Tom? Is how you qualify?
Yeah, so let's say that my home right now is at 2.87%. It's really low. So, but I want to improve my home, make it bigger. When I borrow money, am I doing the entire loan at a higher interest rate? How would that work?
So that is actually a huge opportunity in the mortgage, in the money industry right now. And there are many options. And the answer is no. No sane company that wants to thrive in a marketplace where homeowners are sitting on billions or trillions of dollars worth of home equity. It's the biggest opportunity right now that is in front of us. And there are a lot of businesses that are taking advantage of this. Now, specifically Pacific Private Money can lend you money in second position, and oftentimes does.
It's not the biggest part of our business right now, but we are working on getting better at that. Meanwhile, other companies have, and I'll name a couple of companies. For example, there's a company based in San Francisco, of which I'm actually an investor in. They're called Figure, at figure.com. And they have an online, very fast funding, as little as 5 days for up to $250,000. And so a lot of people are going to companies like Figure for a very fast and easy secondary financing. And the rates are as low as 6 and as high as 10. It depends on your credit profile, but they do not require you to pay off your first. It's a true HELOC second. Unlike other HELOCs, it's 100% funded at closing. So it's not like the ones you used to be able to take out with, say, Wells Fargo or Bank of America, where it was $250 and you could draw it out. This one is a fully drawn loan. That's one. The second one is a company called Unlock, and there are several competitors with Unlock. Those are companies where you don't take out a loan at all. It is a very interesting equity loan where they give you a portion of the equity remaining in your home, and they become essentially a joint venture partner with you, so to speak. I know that's not technically what they would call themselves, but you don't have to, you never pay them back until you sell your home or refinance.
Yeah.
So they're taking it's a more of a, for them, it's a longer term investment in the equity. And there's an internal rate of return that they've solved for, but there's no payments for you. So that's another way that people can, without having to take out an actual second or apply for a secondary bank loan, they can, it almost feels like in some ways like a reverse mortgage where you're taking money out, you don't make a payment, but in this case, it helps you unlock the equity. So those are two solutions, Unlock and Figure, if you're looking to pull equity out of your home for like you said, as improvements. But that's gonna continue to grow in the industry. Is looking at that, those trillions of dollars of homeowner equity and how it can be readily and easily tapped.
Great. Mark, give out your information one more time.
Yeah, PacificPrivateMoney.com. That's PacificPrivateMoney.com.
Great. All right, you guys, we're going to cut out. Here's our thoughts for the day. Did you hear about the new cryptocurrency called Decibel? It's a sound investment. And where do bad rainbows go? Bad rainbows, they go to Prism. But don't worry, it's only a light sentence. All right, tune in. I'm sorry, these puns are bad. My daughter keeps saying, stop telling those dad jokes and those dad puns. I know she loves it. All right, tune in next week to The Best of Investing. We're going to be giving away more free prizes for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown, wishing you the best of investing. So long.